You take a look at the revenue, I mean, it is outrageous, these numbers, right? But investors, I guess this is a stock that's priced well beyond perfection going into these numbers.
Yeah, and we're talking about the after-hour share reaction down, what is it, 2% now in after hours. We're talking about the performance of the outlook relative to the average of analyst estimates, right, relative to consensus. So Nvidia's guiding $20 billion plus or minus 2% in the fiscal fourth quarter. You know, in the range of estimates that Bloomberg compiles, there are those on the street, and not just on the sell side, right, on the buy side, that wanted and saw even more being possible. It's just a fantastic story still, even if you kind of forget the market reaction for a minute. There was $10 billion of net income in the fiscal third quarter. That's more net income than Nvidia booked in the entirety of full year fiscal 23. So I guess the conversation now changes to what's the future look like to kind of justify the trajectory of this stock and what keeps it going. And it's important to note that on the call, one line from Jensen Huang, the CEO, is that they do see a way that Nvidia continues growing its data center business through 2025, which is kind of the longer term outlook that we got.
Yeah, tell us a little bit about those bright spots. You mentioned the data center division, the star performer, but at the same time, perhaps regional sales to China might be declining?
So it's so important to explain this story. What Nvidia said, first of all, through the CFO commentary letter, is that shipments to China will drop in the fiscal fourth quarter. In other words, the period that we're currently in. That is the direct impact of US technology export curbs that were expanded last month. But it's not the end of the story. A big part of the revenue outlook is that even though China has been impacted, and China is 20 to 25% of data center sales historically, they're making it very clear that demand from elsewhere around the world will more than make up for the lost sales in China. This is a short-term story that investors knew about and were braced for. The bigger picture is what they warned us about in August. What if those US technology export curbs have a long, indefinite impact and the market of China is closed off permanently? That is kind of the bigger picture here, that one day US technology companies won't be able to do business in China, which, as you guys know, is a critical end market for consumer technology and data center now as well.